People need an income that's guaranteed to them.
If you lose money to taxes, you're never getting that money back.
You need to get serious about adding some lower risk.
Greed. I don't like greed.
The thing to be afraid of, honestly, is the thing that we're not thinking of, the black swan event.
There's a tsunami coming. Bye.
Welcome to Retirement Coffee Talk with Charisse Rivers.
Just coffee talk.
There's a lot of noise, a lot of chatter. Who do you listen to? Who do you not listen to? You have to stay focused.
A fun and informative look at the issues of wealth, retirement, and protecting your life savings.
These advisors out there that were trained to sell, and have all these fees, they don't want to talk about this product, so they make less money.
And now, Retirement Coffee Talk with Charisse Rivers.
Hello again and welcome to Retirement Coffee Talk with Charisse Rivers at Zinnia Wealth. My name is Randy Cook. Each week, Charisse and I sit down here and talk through some of the issues that you might be thinking about, wondering about, worrying about, all these different things that are kind of uncertain when it comes to retirement. And that's where we help and kind of smooth over some of those bumps, because having some plans really does help with that uncertainty. Charisse, how are you doing today?
Oh, I'm doing all right. It's been a crazy week. There's always a lot of uncertainty, it seems like, these days.
It is so true. I mean, since the last time we talked, we've gone through Halloween, we've gone through an election, we've gone through an interest rate. It's just like bing, 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 bing.
I mean, Halloween, my insulin spiked because I did nothing but eat candy while I was passing out. And I feel like it's spiking still for some reason. I'm not eating candy.
Well, they bring all that stuff to work. They pawn it off. Here, everybody, put it in the break room. And then everybody munches on that all day, and we're all sugared out by 3 o'clock in the afternoon, and then wanting to take a nap. So that's still going on right now. And then
I'm not eating candy right now. It's the election that my insulin spikes.
Okay, I gotcha.
Bad joke.
Yeah, no, and this is so true. So a lot of people have been worried about the election, and really, A, who's going to win, and then B, what's going to happen to the market? What's going to happen to my money? Because my money is tied up in that stock market, and what's going to happen after the election. So I think that's kind of where we're actually going to start today, because for those of you that are worried about this, we really shouldn't be. And this is Jonathan Fahey, and he's on Fox Business and saying, every year it seems to be that the market just, once this is over, just does just fine.
Regardless of who's in office, here's what we've actually found. Here's what the data shows. The last 4 elections, the stock market was up every single time after the election, regardless of who was in office. So I have a lot of optimism in the American economy. I don't have a lot of faith in the government and the politicians, but I do know the stock market in the U.S. over the long haul is going to go up and to the right. So you want to be a part of that roller coaster and stay in the game.
So there was a study that was done not that long ago that we talked about, where 60 to 70% of people were worried that if their candidate didn't win, the economy would tube, the market would go down. And that just isn't historically the case. So, Charisse, as people have come in, you've told me that they're talking about it, they're worried about it. But to me, that kind of means that they're a little uncertain about how much risk they have in the market. And maybe that's something that you need to address. Is that part of the conversation?
It is, but I got to backtrack to what that goob just said. Call him a goob.
All right.
The one, I get what he's saying, but the one thing that just pointed out to me, it's the first time I've heard this, optimism in the economy. He's like, I have optimism in the economy. Hello. So markets, yes, they seem to go up after an election, more times than not. That is actually true. But to have optimism in the economy, it's not the market is going to drop, in my opinion. It's when is it going to drop? Because the optimism in the economy, there is no optimism in the economy. I mean, really think about it. They're yelling out loud that inflation is down, but it's not down. We're still paying more now than we did 4 years ago when you compound the growth of inflation. Your price of items at the grocery store and the typical things we use are up by 26%. If you go to Trueflation, it's a website, you can see exactly how much things have gone up. So even though we dropped inflation rates, we're still paying higher prices, right? So personal economy is being crushed on the daily in these people's homes. Interest rates, yeah, they've come down. But here's the problem. There's huge hedge fund managers out there right now, Randy, huge. They are shorting treasuries because they are almost certain that interest rates are actually going to go back up. And so these are big hedge fund managers. There's things that people out there, that individual doesn't know that could possibly happen, because that means inflation is not in control. If interest rates go up, that means inflation is not in control. So we're having these people put these shorts on these treasuries is a big deal. And then just think about the last cut. Well, mortgage rates were supposed to go down, but they didn't, right? On average. So that tells us, that is proof that it didn't move the needle. That means inflation is not in control. And now the government has, pie on their face because they've got some serious decisions they're going to make. So I'm actually not even sure they're going to continue to lower rates at the level they were going to, and or if at all right now. So we'll see what happens in the future. And then I was just reading and catching up on debt. Do you know we just hit over $1 trillion that we're paying in interest on our debt?
Mm-hmm. Yeah, it's $3 billion a day that we're paying right now.
It is ridiculous. And we'll be spending next year somewhere around $7.5 trillion, and we only have the revenue coming in of $5.8 trillion. So I am not being a fearmonger. I'm going back to what this goob said on radio, optimism in the economy. Okay, yes, for the short run, we might be okay, right? But in the long run, we're really potentially, we could see a recession here in 12 to 18 months to 24 months. I don't know. But we've kept the Band-Aid on for a long time. And so I am worried about the longevity of the market. I'll be honest with you. Short term, no, within 6 months. So you asked me a question, Randy. Are people concerned about the market and their money? And is this a sign for them? And it is. If you are looking at the stock market and you're worried about the elections and what happens over the next 6 months, that means you don't have confidence in your plan, right? Mm-hmm. That means you probably do need to go get a second opinion, because you should have absolute confidence in your investments, no matter who and what happens over the next, 4 years. So if you don't have an exit strategy, number one, I want you to think about this. There has to be an exit strategy in your investments, right? On some of your dollars. I've always said that. I always believe that. So that means, is your advisory firm, do they do active management? So, we can do day trading, and we have day trading models in our portfolio. And so we can exit 100%, we can exit 50% if the market starts to tip and go down, and we can enter right back in right the next day. So right now, there is no better time than the present to have active management in a portfolio, Randy, because things move so fast. And it's important to have that. And it's also important to have buy and hold strategies. But when the knife drops and the market crashes, hey, you're going to lose, probably 50 to 60% in that portfolio. And as long as you don't have everything in that portfolio, then you're probably going to be A-okay. Maybe. I can't really say it over radio till, we take inventory and we see what your situation is. But we just talked about trillions of dollars of debt, right? And what we're paying on our interest. What about taxes? Taxes, make the world go round. Income makes the world go round. Are you prepared for tax brackets going up and your deductions going down to half potentially? Are you prepared for it? So this is why your advisory firms should be doing tax planning. So we have an amazing tax planning software, and we're not doing your accounting. I'm not doing your QuickBooks. You go to your CPAs for that, or you can use our CPAs for that. We're figuring out your tax plan. If somebody passes away, now we're in a higher tax bracket because you're not married jointly. It's single, right? And so most people, 9 out of 10 are in a higher tax bracket. So how are we bobbing and weaving as your tax bill goes up over the next 4 years if somebody passes? And then if both of you pass, then we have a larger tax bill to the kiddos, which is the kiddos penalty. So again, back to, I feel like in the short run, markets are probably gonna be okay, but in the longer run, 6 to 12 months to 18 months, I'm worried, because all these elements are very crippling, and the economy behind the scenes isn't as gracious as most people are thinking, because Wall Street's going up. It doesn't mean all the stars are aligned behind the scenes. Those are, we're looking at technical indicators. We're looking at permits being pulled. We're looking at real inflation rates, and we're looking at unemployment rates going up. So there's a lot of things out there that we have to worry about. And so I want to circle back, Randy, because I did go off on a tangent here. If you are concerned about what's going to happen over the next 4 years. And you just don't have those sit downs, or you don't have that holistic financial planner that goes through all these steps of retirement consistently with you. Give us a call, because that's what we do. We love doing it. Some people out there, Randy, say, oh, well, you shouldn't have to know everything. Your financial advisor should have to know everything, especially if you're in retirement, because you're going to go to this office. They're going to give you one answer. You're going to go to this office. They're going to give you another answer. You're going to go to the other guy that you work with in this office. Isn't it nice to have it all done in one office? And that's how I feel. And that's how we built our business. We wanted a safe haven for our clients to come in knowing that you're going to be talking to our CPAs, you're going to be talking to our attorneys, you're going to be talking to the same advisor, you're going to be talking to the same Medicare salesperson here at Zinnia Wealth Management. And to me, that is purposeful. And boy, does that help people not having to go here to there and then have to get second opinions here and there. So again, Randy, why don't you close this out for me? Because now I'm rambling.
What I take from that is this, is that if you are unsure and you are nervous and you are uncertain about the future, well, who isn't really? I mean, in times like this, I saw that, in 2023, the market went up 20%. This year, the market's probably going to go up 20 to 25%. And how many times has it been that we had a third year like that? And I look back in history, only 2 times in the last 70 years has the market repeated that kind of performance. So we probably are looking for at least some kind of a slowdown next year. It would be very unusual if the market continued to go at the rate that it's going right now. So if you're on the edge of retirement and you say, I need my protection, I need my growth, I need my income, well, it's time to sit down with Charisse and say, let's lock that down. No matter what the economy is doing, let's make sure that that income is coming in. And that is one of the things that I think is reassuring and takes some of the uncertainty out of it. When you know the paycheck is there, you feel a little better about things. Let's have that meeting. We call it a complimentary retirement consultation. If you look on our website at zinniawealth.com, you're going to see a big gold box there. It says complimentary retirement consultation. When you click on that, we're going to ask you to put in a little information there so we can reach out to you and just have a conversation about what's concerning you. What do you want from help from your financial advisor? How might we be of service? You can also call us, bypass all that, and let's have the conversation there. 833-368-3680. 833-368-3680. We're going to talk about that income part. People are really wanting that pension back, and they're actually protesting some places now for it. We'll talk about that coming up next on Retirement Coffee Talk. Welcome back to Retirement Coffee Talk with Charisse Rivers at Zinnia Wealth. Online, it's zinniawealth.com, and I invite you to go to the website and tool around a little bit there. As you go to the media tab, you'll see the navigation bar up there. Click on that. That's going to bring you to our podcast. Charisse has a lot of fun interviews that she's done with celebrities, talking about, fun things, but also financial issues, things like that, things we can learn from some of these people. And also, our podcast is there. So if you hear the show, you can't hear the whole show, you want to hear more, it's all right there for you. You can also find us on Spotify and on Apple as well. Just look us up under Retirement Coffee Talk. All right, so creating income. We talk about how important that is. That's what everybody wants to know in retirement. I've got to check every 2 weeks now. What am I going to have in retirement? That's a big part of what Charisse does. Well, it used to be a lot easier because there were pensions. Your employer provided part of that. Today, only 15% of people in the private sector have a pension, but they want them back. Workers at Boeing have been striking for weeks, and one of their demands is bring back the pension. I don't know if they're going to go for it, but you know what? This is something that I've always said, I wasn't a mail carrier. I didn't work for the government. I didn't work for the railroad. I'm not going to get a pension. So it's up to me to create my own pension. And Charisse, that might be a kind of foreign idea to people, that they can create their own pension. So let's talk about that.
Yeah, well, I call it life after the 401k.
Okay.
And we know pensions are like dinosaurs these days. And, there's striking going on with Boeing because those people want their pensions back. People love income checks. Income makes the world go around, and they just want to shore up their income, right? And you do that with pensions and Social Security and other types of investments out there. And when they started dropping off pensions years ago, they said, okay, we're going to create these 401ks, you contribute, and they'll match. And now you're in charge of your own monies when you retire. They don't want to be liable. So now you are your own pension manager, right? Think about that. You're like, oh gosh, I do have to be my own pension manager. And the problem with that is this, Randy. People live off less money because they're so worried about running out of money, because they do have to be their own pension manager. Because you go to a typical firm that's managing money, they're just like, yeah, you can take 4% or 5% or maybe even 6% out of the accounts. And sometimes they do that and they start to watch their accounts go down. Or maybe they're managing it on their own and they don't have an advisor. And so they're like, oh, I'm worried about running out of money. I'm only going to pull 2 or 3% out of this portfolio. And this is why you work with an advisory firm that actually understands pension planning, income planning, asset planning, because I will say 9 out of 10 people that walk into my office and the advisors are working with them, there's this set income people think that they have to live on. And, that's basically to cover their fixed bills and a little bit of travel. But when we break out our income planning software, we always say, I will say 9 out of 10 times, what if we add another $10,000 a year, another $20,000 a year? Maybe I just did the other day, another $50,000 a year for a client. And they're like, well, I'm worried about running out of money. Well, let the math show you that you don't have to worry about that. If, you really front load your retirement, with these income checks, and then we pull back the reins a little bit, because during your go-go years, that's when you want to travel. I mean, you have worked your entire life. And this is why I love what I do here. A lot of people, their only fear is running out of money. And yet you've worked your whole life and you shouldn't have that fear. And the only reason why you'll have that fear is because you haven't sat down with somebody who actually does income planning, that understands it and puts the plan together in different segments, and you turn on these switches at different times. And I will say this much: don't fear running out of money. Fear not having a plan that helps you understand how you could potentially not run out of money and potentially live off more money than you have ever imagined. Most retirees are spending 20 to 30% less than they actually could be because of this. And so if you have a pension, amazing. We love pensions. We can also create these private pension plans here in our office. If you say, Cherise, hey, I got $1 million. I really want to button up, 400,000 of that to cover my fixed bills and even some travel. We can create those guaranteed incomes for life, just like your companies do through their pension plans. And a lot of our advisors use that source. A lot of clients I sit with, Randy, I personally don't have to do that because we have a different way we plan. It's because of the assets maybe you've saved up. A lot of people that I'm sitting with do have pensions, so I don't have to create those extra pension incomes. Just know that there is a way. Just know that, life after the 401k doesn't stop there and just taking money off the top. Just know pension managing is not the easiest thing to do. And so we will absolutely help you do that here and make sense of it. And we'll show you what the next 30 to 40 years looks like based on the tools that we use. And we'll do it on a very pessimistic planning strategy. And then we'll fluff it. So you can say, well, what if things turn out better, right? But we always like to plan for the what if. We plan for, let's spend more money during our go-go years because those are your healthiest years. And by golly, you better go enjoy it because, things happen very quickly. And you don't want any reason to say woulda, coulda, shoulda, because you should have done more sooner before things do set in and the health issues potentially in the long run.
Well, there's a couple of different sides to retirement. There's the financial side, and then there's the psychological side. And I've read a lot about both. And many times from the psychological side, it takes people a little time, even a year or two, to kind of settle into this. I'm not going to work anymore, and I'm trying to figure out who I am in retirement and what I do in retirement, what my day to day is, and what my Tuesday is, what my Thursday is, what my Saturday is. You figure that out as you go. And what I'm also hearing is people do the same thing on their financial side. Is they think, oh, I don't want to run out of money, and that's the number one thing in your head. And then after a year or a year and a half or 2 years, you look at your accounts and you go, it's going up. It's not going down. It's going up. And you start to say, okay, I guess I have permission to spend. And then people start to settle into the spending and the psychological aspect of who they are. Have you seen that with your clients?
I will say any newbie that comes in and sees us for the first time, we see it all the time. And they don't come out and tell us that. I already know what they're feeling and what they're going through. And I already know that there's this void, like, am I going to be needed? You know, what am I going to do when I retire? They're not saying it out loud. I start to ask the questions. I'm like, so what are you going to do? And then it starts to come out. I don't know. Like, I'm so used to working. And I said, well, why don't we come up with a 12-month plan? It's a quarterly step-by-step plan on what we do next. Because the first 3 months when you retire is a little awkward. You're like, what am I supposed to do? So typically, if you're married, you got a lot of honey-do lists, really between 3 months and 6 months. So you don't have to worry about it that much, because trust me, the spouse has a plan for you. Trust me.
Okay, all right.
And then that 6-month period, some stuff sets in. You're like, okay, honey-do lists are gone. Now what are we going to do? And you should be traveling, but people don't really plan the travel right away. It sets in a couple of years later. I guess I should be traveling. No, by your 6 months, you should have your first trip planned if you already haven't. Some people say, well, Cherise, I just don't want to travel. I've traveled my whole life and keep it local. Trust me, we're going to come up with some plans. And I said, what about volunteering at your church? Or is there a charity group? Or, do you want to go to an animal shelter? Like, start doing those things. And they're like, you know what? Maybe I could do that. Maybe I would do that. I'm not sure. And so we just start opening those questions up, because I'm going to tell you, when you're getting ready to retire, it's emotional. You already know that. I'm not telling you guys anything you don't know, especially if you're right there and you're ready. It's emotional. It's psychological. You still want to feel important and needed. And I'll say 1 out of probably 100 people walk in and is like, I am ready to retire. I don't care about anybody else. Let's go. Right. I get 1 out of 100. Literally, those are the numbers.
Yeah.
So it's typically the opposite. And then once you're retired and we're working together and we're sitting down, we're doing our reviews, we're doing the tax plan every year, changing the investment strategies from time to time, you start to get more confident, and you're starting to see that we're taking withdrawals from the accounts, and you're starting to see, okay, my accounts are still growing. Okay, this is great, right? So the fear of running out of money tends to fall off, and then you're 3 years in, and you're like, okay, maybe markets were wobbly, and we shifted gears, and we stopped taking income from one asset, and we started pulling it from another asset, but we're still watching assets go up, or we're not seeing them get derailed, because we don't know what's going to happen the next year, 2, 3, 4, 5, right? I mean, I think we feel like we know, but if you have some of your investments going up when the market is going down, that's what we like to do. If you have some investments going down when the market goes up, that's typically natural in a portfolio, depending on how you're invested. And then if you have active management built into a portfolio, you're seeing a little less of that ebbs and flows, right? And so we do a little of all that kind of stuff in our portfolios, from the notes to the insurance companies, to the exchange traded funds, to the index funds, to stocks, to killer dividend portfolios, to the buck doesn't stop there, to your health plan and making sure we don't need to change our plans every year and what's changing in our lives, to your long-term care plan, all the way to your estate plan and your wills and trusts and that continued tax plan, right? So there's so many things that have to be covered annually to make sure that you're staying the course, so that worry is not that much of a worry, right? That's what we hope, that the worry goes away with the right plan and with tweaking of the plan.
I think that preparation breeds confidence, and you want that confidence to be able to go out there, plan that trip, take that trip, go on that cruise. You've been sitting in church all these years, and they go on these mission trips, and you could, I could never do that because I'm working. Well, now maybe you can. There's a lot of different things that are open up to you, but you got to have the confidence that you can go do them. That confidence comes from an income plan to know that the money is there and that bucket is continually being filled up. Give us a call at Zinnia Wealth. Go to our website. Let's sit down and build you that kind of plan. What if you found out, you thought, I'm 3 years from retirement, and then you sat down with Cherise, she did the math, and you go, you know what? Yeah, you could go 3 years from now, but you could also go now if you wanted to. And that's a great feeling. give us a look on our website, zinniawealth.com, ZINNIA wealth.com, and hit that box. It says complimentary retirement consultation. We'll take it from there. Or you can give us a call, 833-368-3680. Again, 833-368-3680. We're going to take a break, and when we come back, we're going to take a look at a list of things that you can do to get prepared for retirement. We got a real good one for you. Stand by for that one. Also, people took a test about Social Security. A lot of them failed. We'll tell you how they failed and what they didn't know. That's coming up. And have you ever gone to McDonald's and ordered a shake or a McFlurry and they said, oh, we're sorry, the shake machine is broken? It happens all the time. I have found out why. And we're going to learn a lesson from that. Coming up next on Retirement Coffee Talk. Welcome back to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. Online, zinniawealth.com, ZINNIA wealth.com. And we encourage you to go to the website. There is an education tab on the navigation bar there. And when you click on that, there'll be a drop down and one says useful guides. And these are great. These are things that you can download about lots of different topics, about Medicares and 401ks and pensions and going it alone and all sorts of different things that you can take a look at there, getting prepared for retirement. And that's actually where we're going to go now. And we're going to get a little help from a comedian here. Tom Papa is doing a stand-up, and he's been doing stand-up since 1993, but he's got a new Netflix special called Home Free, where he says, there have been some changes at my house and some changes in my life.
We dropped off my last daughter, my last child, my youngest, off at college, and they're all gone now. And nobody tells you how hard it's going to be pretending to be sad. Not one tear. Not one tear. I really thought I was going to cry. I feel so bad. But I think I might be happier than I've ever been.
That is okay. That is funny. That's a man's version, number one. I want to hear the female version because, sorry.
It's all
so he's
different.
talking for the man. He's totally talking for the man.
Well, don't get too giddy, Tom, because they do come back. I can tell you that from experience. All right. So he's trying to get ready for, the next phase of his life. And that's really what this show is all about, because retirement is the next phase that we're trying to get ready for. So there are things that we can do. We sit down with someone like you, Sharice, and certainly we want to kind of, map that path out. But there are things that we can do, 5-10 years before retirement that just kind of get us ready for that. Can we get a little list here from you of things that you can see?
So I would start with the goal in retirement is to have less bills so you can spend more money on you and your loved ones and travel, right? So do you or don't you pay off the mortgage? And I've always been a fan of paying off the mortgage. And this is why it's really important to sit with us before you retire if you can, because as taxes change, my verdict on that could change. And so, for example, if your standard deductions are going to half in 2026 and tax brackets are going up, a lot of people out there are going to be itemizing again and not taking the standard deduction. And as you know now, the above the line write-offs, when you're doing your standard deductions, there's not a lot there. But when you're itemizing, you can write off the interest up to a certain amount on your home mortgages. And if interest rates are low, there's this thing called arbitrage. And let's say your interest rates are at 3.5%, but you can take those dollars when you're paying off your debt and go make 6.5%. So things are changing in that world a little bit. But no matter what I say to people, yes, don't pay off that 3.5% mortgage. People want that Mr. Pillow, sleep at night pillow that just says, but I wanna pay it off. And you know what? I get it. Paying off the mortgage just makes you feel good. It's one thing you have to worry about. And I know that a lot of people want to pay that mortgage off because if one of you pass away, we lose one of the Social Security checks, and we don't want to have this debt over our heads. We want it all taken care of. So I lean towards, even when I do the math on taxes and the cash arbitrage where you can make more money, I still do lean, pay it off, because we don't know how long we're going to live. And it is a burden to have to worry about it. And it's just this, even though you can make more money by not paying it off, it's like it's something that you're never ever going to get rid of. It's always going to be there in the right side of your brain, and it's always going to stress you out. So I want you to enter retirement stress-free. And I already know if you don't have it paid off, you're not going to be totally stress-free. So might as well get working on it. So I'm going to go ahead and give that a check. I'm checking it off right now. Pay the mortgage off, unless we get really granular when you come in and see us. Number 2, this is an absolute. Credit cards. Pay your credit cards off. Do not enter retirement with credit card debt. I have met some people that have entered retirement with $30,000 to $50,000 in credit card debt. Why do you want to worry about paying that off in retirement? Pay it off when you have income checks from your employer coming in. Be more responsible. Now, if you have credit cards and your plan is to pay it off and you're doing this cash interest rate arbitrage and you're rolling, let's say you got $20,000 in credit card debt from one credit card to another credit card that has no interest, that's a different story, right? There's kind of a strategy there, as long as those credit cards are offering you 0 interest. So this is nothing I'm telling you to go do. This is just a conversation that we have in our office. But again, I still am going to check off, pay your credit cards off, unless we come up with a well-oiled machine and plan on those credit cards. But typically, pay them off. The third one is know how much you currently spend per month on your budget. So when you come in and see us, I take inventory. Our staff takes inventory. The other advisors take inventory. And what does that mean? What are all your liabilities? What are going to be your lifer liabilities? And we know, I call a liability, we got to pay an electric bill. We got to pay a grocery bill. We have to pay gas, right? Because you're always going to have to pay those things. This is why those other bigger liabilities like car payments and mortgages are best to get those off the balance sheet. So what are those things that are going to be constant and always the same and going up with inflation? And then we want to take inventory on your income. Do we have Social Security? How much? Do we both get Social Security? Is there a pension? If you both have a pension, great. If one of you have a pension, and what happens if they pass away? Does it pass to the spouse? Does 50% pass to the spouse? What do we have to plan for in case somebody does pass away earlier for the income needs, so that the surviving spouse doesn't become financially destitute, and so that they don't have to change their lifestyle? That would be awful, right? So, but you have to plan for that budget and how to. Number 4, this is the big one. I tell everybody this one: create a Social Security account, especially as you're nearing the ages of 62. Do you know there's scams out there where people are creating a Social Security login for you? And let's say you're not going to take your Social Security to 67. People are collecting your Social Security at 62. What do you know?
Oh, no.
Yes. So the sooner the better. I don't care how old you are. You should have a Social Security login. And, you could be 40. You could be 30. Even though it's not that big of a deal at that age, it's like right in those Social Security ages, 62, 67, and 70, you really got to have those just so nobody's collecting off you. It's amazing how many times that has happened. So make sure you're protected from the Social Security scan. And I will forewarn you, when you go to the Social Security website, it's going to ask you 5 questions, and I'm almost going to tell you, you'll miss one of them, and then you'll be locked out for 24 hours. Just go back in, be patient. Trust me, you're going to be yelling at your screen, and your spouse is going to be like, what are you yelling about? I'm like, this stinking Social Security site doesn't work. Trust me, I've done it myself.
Okay.
I've been locked out like 3 times my first time I did it. So I feel the pain for you all. So just do that. Do me a favor and do that. Okay, number 5, signing up for Medicare when you're 65. So we know that Medicare is automatic. When you turn 65, you're going to get your beautiful red, white, and blue card, and you have Medicare Part A and Medicare Part B. But if you're working with an employer, these are conversations we're going to have with you. Sometimes your employer says, hey, you are required to get Medicare Part B. And some employers like, no, just take your A. And they cover the rest with their insurance. So knowing the language and what you should and shouldn't do is very, very critical. So make sure you're coming in and talking to us about your Medicare. We're in Medicare season. I feel like we're always in Medicare season because somebody's always turning 65, quite a few people every day across the country. So we help people with that. I will go into number 6, IRAs and Roth IRAs. Doing the math. Should you be rolling your IRAs right now while we're in the lowest marginal tax bracket we're ever going to see in history to a Roth IRA? And I'm going to let you in on a secret that most people don't know. You can do that at any age. If you have a 401k and you're 40, you can, as long as it's a rollover, you can roll over IRAs to a Roth. And you don't have a penalty. You just have to pay the tax bill for it that year, right? So again, we have specialized, I have 2, just to double check and triple check everything we're doing. Tax softwares where we take your tax return and we upload everything. And then we start to figure out the math on, okay, do you have to pay quarterly taxes? Yes or no? Can we roll an IRA to Roth? Yes or no? And can you contribute to a Roth? Yes or no, depending on wages. And then how much of our IRA should we contribute to a Roth? I did 6 tax plans this past week, and 2 of them, it actually didn't make sense to roll their IRAs to a Roth. I had to explain why. And they went, whoa, I didn't think you would ever say that. And we did the math. I was like, it doesn't move the needle. It doesn't make sense. It's based on how much they saved in that IRA, to be honest with you. So that's game changer. It makes a big difference. So making sure while taxes are down, right now, standard deductions are up, taxes are down. In 2026, that's all going to change, right? Possibly, and more likely, yes. Start doing it while taxes are on sale right now. You have this year and you have next year to roll as much as you can, and maybe do it before you hit the next tax bracket, or maybe you can afford the next tax bracket. Maybe it's only 2 pennies more, right? 2 cents more, depending where you land. Let's do the math and find out. And listen, if you're listening now, come December 1st, it's probably going to be too late because we're slammed. We are slammed. I'm overworked right now, but I'm excited about it. It's fun. It's fun stuff for us. So number 7, choosing a financial professional and developing a financial plan. Randy, what do you think about that?
That's the most important thing of all. That's where I say call Cherise.
Ingenious. So how in the world can you be confident about entering retirement? And if you're in retirement, like you're hearing me, you're probably like, oh gosh, okay, maybe she's right. Without a written plan, without seeing that tax plan on paper, should I or should I not? Or should I gift? Or should I give to charity? Should I do QCDs? Like, how do you know if you haven't done the math to find out? And then how in the world can you be confident about your income plan and when one spouse is alive, and then the inheritance plan without the written plan, right? So I've been doing this for years. Our advisor's been doing it for years. And, if I knew nothing and I was about to retire, I get it. Like, who would have known that all these steps, all these things really need to be done to protect your confidence? We're here to protect your confidence so that you make better decisions as we're getting a little bit older and we're entering these different phases of life. So just know that. I think that's really important. And last but not least, and this is one people forget, Randy, choose a estate planner and develop a will or a trust. What do you think about that one, Randy?
Well, I mean, that is one of the reasons that you have the Financial Services Center, so that people have access not only to helping people with their investments, but also their taxes and also their estate planning. You've developed those partnerships with people throughout the area over the years, and people have access to it.
Exactly. We've had quite a few deaths in our office. Some really close clients of mine have been clients for over 10 years, one of them for 20 years. And you know what they confide and tell me? They're like, we are so happy that you pushed us to meet with your attorney and get the wills and trust done, and everything's baked in. Thank you for the checklist, because, this is what we're about to embark in now that somebody's, passing away or in hospice or about to. So having that person you can rely on that understands every version about what you're about to go through is critically important. And making sure you have that will done, that is an absolute number one. Power of attorneys, healthcare surrogates are right there with my number one. And then figuring out what kind of trust do we need? Do we need a revocable trust, an irrevocable trust? Do we build in the asset protection trust? Do we do that sooner? Do we do that later? Do you need a dynasty trust? I'm telling you, the pour over wills, there's a lot of decisions you have to make. Number one, to protect your assets in case, you hurt somebody while you're driving, but also to protect the surviving spouse and to protect the legacy to your heirs. I mean, come on, they're going to be stuck with this huge debt. I mean, the government is just, we're in a huge deficit. Who's going to pay for it? We're paying for it now. Your parents are paying for it now, but the beneficiaries, you're certainly going to be paying for this. And you're going to be like, dang it, I wish we would have planned a little better. I wish we would have talked to mom and dad and understood this tax consequence that we have to deal with. So having those conversations and deciding if you want your legacy passing on to your kiddos and your grandkids and family tax-free or all taxable. I think that is a big conversation when it comes to the estate plan.
Well, it's a great list. Things that we can do to get ready for retirement. And these are things you can start doing, 10 years before retirement, 5 years before retirement, 3 years before retirement. Pay off the mortgage, pay off the credit cards, know what your monthly budget is, create that Social Security account, sign up for Medicare, do the math on that 401k, those IRAs. They are a tax time bomb. Are we going to move some money over to a Roth? Find your financial professional, that financial advisor in your life to develop this plan. And then along with that, have that estate planner taking care of the essential legal documents of your life, which would be a will and a trust and a medical directive, the power of attorney, all of those things. So vitally important. And these are the things we said the word confidence a lot on the show today. We want you to go into retirement with confidence. And if you have all of this locked down, how could you not have more confidence going into retirement? Give us a look on our website. Give us a call. ZinniaWealth.com, ZINNIA Wealth.com. You'll see a gold box there. It says complimentary retirement consultation. Click on that. We'll ask you a few questions. Our team will reach out to you, or you can reach out to us. 833-368-3680. 833-368-3680. We'll be right back with more Retirement Coffee Talk. Welcome back to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. Online, ZinniaWealth.com, ZINNIA Wealth.com. We encourage you to check our website out today. If it's time to talk about your retirement, we are ready to help. One of the things we talk about, and a lot of questions are about, is Social Security. The people at Nationwide went out and they asked people Social Security questions. What do you know about Social Security? 50% of the people that they talked to believed this. If you claim your benefits early, like 62, 63, 64, the benefit amount will go up automatically as you reach your full retirement age. Folks, that is not true. So
By far.
Let's straighten that one out right here, Sharice.
I can't, that is a shocker to me that 50% of people think that. Like, where is education coming from that they think that? Because what would be the point for Social Security to have 3 ages? You can collect at 62, you can collect at full retirement age, which is as high as 67, or wait till age 70. So I'm just curious why, if you think you can collect at 62, why you think...
Maybe it's because of the COLA, because the COLA, it comes out every year and they get a teeny weeny little raise.
Okay.
And maybe that's it. But if you lock in your rate at 62, that's
your rate.
That's what you get.
That's what you get. So
Yeah.
if you're going to get $1,000 a month on Social Security at 62 versus $1,500 waiting till 66 or 67, just so you know, your $1,000 is not going to bump up to $1,500 when you're 66 or 67. No, the only way your Social Security goes up moving forward is based on COLA, right? And some years you get a 0 on COLA. That's cost of living increases, right? I will say, that could be where the confusion is at. Oh, well, my Social Security is going to go up. Yeah, it's going to go up only when you get that increase, right? But there's some other things that I think people don't understand. If you collect at age 62, Randy, and you realize midway through, you have 12 months to change your mind. And whenever you collect, you have the choice to stop taking your Social Security, but there's only this 12-month window that's a possibility. If you go 12 months on one day, then you can't change your strategy.
One do-over.
One do-over. But you do have to pay all those dollars back. That's part of the deal.
Okay. All right.
So I had somebody who did that. They're like, Sharice, I took this. I didn't even tell you. I'm like, wait a minute. that's not even part of our plan. They're like, I know I did this because of this and I realized it. I was too embarrassed to tell you. I was like, I was going to find out. And they said, I got to undo this. I'm like, you do need to undo it. So there was a whole conversation and he had to pay it back. We pulled it from the asset. No big deal. He had plenty of money, but it was don't do things unless you talk to your advisor. There's a reason why we get paid, right?
There you go. Well, it is an education process of what we're in for in retirement, and Medicare and Social Security are two government programs with a lot of red tape, a lot of twists and turns, and a lot of detail. So that's one of the things that Charisse is going to help you through for sure. All right, so this is a little bone to pick that I've got here. This is a bee in my bonnet, so to speak. So how many times have I gone to McDonald's? All I want is a milkshake. There's times in life that my motto is ice cream makes everything better. So I go to McDonald's to get myself a shake. And they said, oh, we're sorry, our shake machine is broken. Really? There's actually a website called McBroken that plots out all in your city of the McDonald's where the machine is broken. It's that big a deal and it's that common. Well, we finally found out why they're always broken. When they bought these machines that make the shakes, they bought them from a company called Taylor. And Taylor had a contract that said, if these machines broke, we are the only ones that can fix them.
Wow.
So now they have to sit and wait for that company to come fix them, and it takes a while. Well, McDonald's has renegotiated that now, and now they can have an independent party come in and fix them anytime they need them. Thank God.
Hey, FYI, Randy, just so you know, the last time I had a shake was when I was pregnant with my son.
Are you kidding me?
I was having shakes every day. And the machine broke. And it was like weeks before it got fixed. I remember I was an angry pregnant girl because I love my strawberry shake. And I didn't want to have to drive across town to go to the other one.
You don't want that. No, pregnant, angry women. No good. No good.
Who would have known all this was happening behind the scenes?
Fix that. All right.
So they had to go in. They got an independent contract so they can have anybody come in, which is that's the way that everything should be. It's called capitalism.
So when I hear that word independent, you use that word here on the show. You say you are an independent advisor. So let's talk about that as we got about 4 minutes left in the show here. Let's talk about that. What is the advantage that Charisse Rivers has her own company instead of working for Edward Jones or Raymond James or Fisher or whatever, all those big companies out there? Why is it a good idea to seek out an independent advisor?
Right. And, the Eddies, the Ray J's, the Fisher, Edelman, you name those big brokerage houses and big companies. They do things a little bit differently. They don't want to do tax planning. They don't want to do holistic planning. They don't want to do income planning. They don't want to do Medicare planning. They don't want to do estate planning. Yet they'll charge you a higher fee than we'll charge you, right? So you're being charged for investment management. In our office, you get charged for investment management, but really at the end of the day, it's a full package. It's like buy one, get one free, right? You're buying the investment plan, but you're also buying the holistic plan that follows you throughout the next 30 years of your life. So independent advisory firms like ours, we don't have the red tape. We don't have to listen to the boss that says, hey, tell all your clients to sell this bond because now we're the new issuer of this bond and we want you to sell that bond and then we all make more money. No, if you're in a bond with us and we like the bond, it's a good bond, we keep you in the bond. Nobody's telling us we got to sell it now. Now you have this deep down centered guilt that deep down inside you shouldn't be selling that bond, but you're doing it because your boss just told you, right? That is the financial services industry as I know it and as most people know it. So it's not just an independent firm, Randy. It's that fiduciary that's an independent firm that it does holistic planning. So listen to me. An independent firm that is also a fiduciary that also does holistic planning. Those are your 3 checklist items you should be seeking when you're looking for an advisory firm.
Well, one of the things I know, when you go buy a car, I know what they try to say to me and they try to sell me something. I know that in the back room, somebody said, okay, we got a deal on this. We're going to get more for this one. So go out there and sell car A. And they push that. It's the same thing in the financial world that they're sitting back there in a meeting and they're going, I want you to go out there and push ABC Mutual Fund because we're going to get more for that. And that's not going to happen when you sit down with Charisse. Those meetings don't take place in the back room. Charisse is looking out for you and finding out what works best for you. Then you make the decision. We'll put the options in front of you. Give us a call. Give us a look on our website, ZinniaWealth.com, ZINNIA Wealth.com. You can see that gold box there. Click on it. It says complimentary retirement consultation. Let's have that free, no obligation meeting to talk about your retirement. Or reach out to us and we'll get that scheduled there. 833-368-3680. Charisse, that is all the time we have for today. I'll give you the last word.
All right. Well, we did talk a lot today about taxes and planning and your checklist as you're getting ready to retire and once you are retired, what to do and what to look for. So dial into our podcast, which is on your iPhones. You can find us on other elements like YouTube, Spotify, iTunes, and do the rewind because there's a lot of important information. And I know there's a lot of noise out there, a lot of uncertainty, and there's a lot of confusion. Let's declutter the confusion. Listen to the podcast. Just start to understand our way of life here at Zinnia Wealth Management. Let us help you get ready for retirement. And if you're in retirement, continue to do retirement well. And by listening to that podcast, I think you're going to understand kind of how we work. Live by design and not by default. And we'll see you here next week.
This has been Retirement Coffee Talk. To find out more about how the strategies we've discussed on this program can build the retirement you've been wanting, call Zinnia Wealth at 352-368-3680 or visit us online at ZinniaWealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Charisse Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and/or categories usually do not deduct transaction and/or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.